tomorrow.
After years of anticipation and months of hints, quantitative easing is finally coming to the Eurozone. Fighting falling prices and high unemployment, Mario Draghi hopes his €1.1 trillion plan will give the single currency area the boost that it needs.
I don't expect a massively powerful impact from QE in Europe because the channels of transmission are probably less obvious than they were in America, for instance, because wealth effects are not as strong in Europe as they are in the US. But all in all, I still think it's a net positive to the European economy.
The central bank stimulus may not even have begun, but its effects are already being felt. With stocks at record highs, the euro at an 11-year low, and borrowing costs to some of the bloc's biggest nations at their cheapest in 5 years. A trend which even a near default by Greece couldn't derail.
So how will the ECB's QE work? Well, the central bank will print €60 billion worth of new money per month to buy bonds from banks, freeing up the cash so that those very banks can then lend to companies in the hope that those companies will hire more staff. In theory, that should mean more disposable income, which, if spent, should push up prices, countering the Eurozone's ongoing battle against deflation. The scheme will last until at least September 2016 or longer if inflation doesn't reach the ECB's target of at or near 2%.
But will the cash really make it through to where it's most needed, in the real economy? What's more, the plan puts the ECB years out of sync with other central banks, like the Fed, now done with QE and poised to raise rates later this year.
For the corporate sector in general, it's going to, I think, accompany or magnify the improvement activity we've started to see in terms of hiring, in terms of capex. So people may not see for themselves, may not see that it's ultimately the consequence of QE, but odds are that they will have a better chance of keeping their job.
When Mario Draghi took the helm of the ECB, many said that he'd never get his colleagues to agree to QE. Though he may have won them over, he'll now have to prove that the project won't be an expensive mistake. Nina Dos Santos, CNN, London.